All right, hey gang, good afternoon. I don't know, maybe evening, depending on when you happen to want to watch this video and how much you want to enjoy your weekend. We made it through the Expiration Friday here, and so another week, but it was a good week. It wasn't easy. It's like I said last night in the video last night. It wasn't easy. If you were long and you just stayed long, then you had a great week. Then it was an easy week. But if you're a day trader and you're coming in each morning, trying to figure out the direction, then you had one tough little deal on your hands this week because the market keeps going higher, so you want to buy it, of course, but you had to be really careful about where you bought it this week because if you bought it on the open, then you had a rough week. Um, it makes highs overnight. You come in the morning, you want to buy it. Next thing you know, you're underwater all day. Like if you bought it today, if you came in this morning and bought the market on the open this morning, you lost money. You didn't have a chance. It went down. From all the way into the close, it was lower. You know, but at the end of the day, we're up nicely on the week. So go figure, right? It's that's what I mean when I say it's not just the easiest thing this week. But we made it through the expiration. We were looking for everybody gets pressed on Friday expiration. I think today was one of those days where, like I said, you push higher into the expiration, so the call side gets pressed like crazy. You pull back, and the put side gets pressed, and then what do? Where I said settle in the middle. Up, down, settle in the middle, like all is forgiven in love, war, and trading, and that's kind of pretty much exactly what we did. Looking out at next week, which is why you'd be watching this. You don't want to hear about this last week. Next week, we've got the expected move that the market makers are pricing into the options chain is about 25 S&P points, 22, 25, just round it, doesn't matter. About 25 or so points, so it's not a huge week. On Monday, we've got housing market, tick flow, and earnings to speak of before the bell. We've got Cal-Maine Foods, Hasbro. It looks like maybe some Bank of America. After the bell, a couple of things: IBM, Netflix, Yahoo, and that's on Monday. Then on Tuesday, let's see, retail sales, housing starts, building permits. You got the Red Book sales and weekly inventory data, earnings. Let's see if anything really jumps out here. Goldman Sachs, Johnson & Johnson, Rails, KSU, Lockheed Martin. Yep. And that's on Tuesday, and that's before the bell. Oh, Philip Morris. Oh, wow, before the bell. United Health. Tuesday's a big one. Okay, and then that's before the bell. And then after, Microsoft, Intuitive Surgical, got a couple things. United Airlines, a few things. But the big ones there look like Microsoft and maybe ISRG. Other key events would be minutes from the recent RBA meeting, our Reserve Bank of Australia, Eurozone, economic sentiment, ZEW, the zoo survey for July. That's kind of a big deal. Wednesday, there's a slew of earnings on Wednesday. My goodness, a lot. You just have to go look. There's a lot. And then Thursday, jobless claims. Philly Fed on Thursday. That's kind of big. Consumer confidence index leading. Existing home sales. Wow, a lot. And then on Thursday, the list of earnings is huge. There's a lot going on Thursday, both before and after the bell. Oh, wow, a bunch. And then let's see. And then Friday, let's see, there's not so much on Friday, honestly. You got Eurozone, Flash PMI, and a few other things. But Thursday looks to be a huge day as far as earnings, that kind of thing. Earnings have been pretty good. But the expected move, though, as priced in by the market makers, and they usually get it really pretty right, and that's priced in at about 22. I just rounded up, call it 25 points. So that's not all that terribly volatile, to be honest with you, given the fact that we've seen 20-point days. So what's a 20-point week, really? And by the way, let me show you something real quick too. If you're interested, let me see if I can size this to where you could see what it is I'm doing here. If you go to simpleroptions.com, you can see here in the URL, and just scale down the page just a little bit right here. Right there, about the fourth thing down, it says free, the simpler report right there. Let's click that, and that'll bring you to a page where all you have to do is put in and it is free. I mean, like really free. You put in your name and email, hit sign up now, and you will get the simpler report like 4 times a day. If you're watching this on YouTube and you didn't know about this, you need to go get this report. It's free. It costs you nothing. All it does is, of course, it's going to capture your email address. Big deal. It's going to send you a report 4 times a day. You see right here, pre-market, mid-morning, afternoon, after the close, etc., and like a pre-weekly get ready for the week thing that I'm sitting here reading from, that tells me everything that's on the calendar for next week, that's scheduled for the earnings and everything else. And I think everybody should have it. So anyway, simpleroptions.com, and then, like I say, you just go put in your name and your email address, and you'll get that report, like I said, 4 times a day. And to be honest with you, I think everybody should have it. So that's that. You know what we're looking for in the way the expected move. Here's the way I can see this sort of playing out for you. All right, this will be kind of on my plan here for the week as to what to look for. Of course, I'll have to see it set up in order to trigger to actually trade it like this. But the way this went out today, I didn't see much at all today on this Expiration Friday, right? We got an inside range, a little lower high, higher low. Like I said, press high, press low, settle in the middle. That's expected. On Monday, we get a little push higher. Tuesday, we get some corrective type trade on Tuesday. We start sitting this thing back down into the averages a little bit. Why do I say that? Well, I go look at the yen, and let me go look at that with you real quick. See, I'm looking at this yen. There it is. And see how it's set up today? It sat down into the average. It got bouncy down here on the lows and closed pretty high. Well, I can see the yen coming off of there, or coming out of there, up a little bit back into the averages. With that, we get a correction likely in the stocks, right? So I'm looking at things like that. I'm looking at the dollar. I'm looking at gold. I'm looking at the euro here at the yen. I'm looking at the treasuries. Here, look at the treasuries, right? Look at the fact that, see this high back here on 616, and then the low that comes in right there on 630, right? Let's draw a line across there. Boom, about a 171. See the treasuries sit down into there for a little support, get bouncy, treasuries get support, stocks pull back a little bit, okay? So, I'm not asking for a lot, but I have noticed, as have some others in our simpler trading staff and our traders and moderators, that the Nasdaq was not performing as well the last couple of days up here. We've had these other little indicators like the treasuries and the gold and all this other stuff. And so, we get bid often into the expiration. Well, we did that. Congratulations. Now let's pull back a little bit, find some support in the averages, and make this next leg higher. How do we do that? Well, we get a little volatility next week. We pull back a little bit, and then we make the bid higher into the next payroll. So hope this helps. Got a couple of trade ideas there for you. I'm going to hop over now into the premium video and look at everything from top down, the currencies, the treasuries, the metals, the energies, the ags, indices, everything. So You guys have a good trade, nice evening, and we'll do it again at the next update. Good night.